Hey, buddy, Boris Lesnar, BK Force. Welcome to our Forex Weekly Technicals for 12/1/12/05 of 2014. Where are the trades? Well, the big irony this week was that we had the U.S. holidays, and yet the dollar kind of rallied into the close of the week when everybody from North America was essentially off the market. But when you look at the charts on even a modestly longer term basis, you see nothing but churn, especially in the euro dollar. Euro dollar is basically a 2400, 2600 trade, and just kind of remains to be that way. May very well be that way really for the rest of the year, because the balance of trade between the euro and the US at this point is relatively even. All of the knowns are pretty much there. I don't think there's anything here, unless we get markedly better employment data and perhaps an improving set of US data into December, that would make the market convinced that US is going to expedite its rate hiking cycle. And conversely, there's nothing here on the European side when we have the ECB meeting coming up this December, this week on Thursday, to convince the market that the ECB is going to expedite its rate lowering cycle, its QE cycle, anytime soon. Basically, we're at a standstill, and you can see this in the price action, where the ECB is just kind of waiting to see when it's going to expand its QE, and the Fed is kind of waiting to figure out when it's going to really begin to tighten monetary policy. Until one side or the other side moves, the price seems to be, I think, in a relatively strict equilibrium here between 24, 26, unless we get some other exogenous factors that start moving things around. For now, though, it's really been a range trader's delight. You're basically selling the highs, buying the lows. The intraday dips have also been relatively good in terms of buying the dips, selling the lows. There's really nothing been trend-like over here. The key levels still remain 26 to the upside, 24 or sort of 23.50 at this point to the downside. But generally, that's really where the market stayed. It'd be interesting to see if this week we challenge the lows or challenge the highs in response to the various data set of figures that we have. But the bigger question is, if we challenge them, are we going to be able to break through them in any kind of convincing fashion? And I think at this point, the situation is unlikely for the time being. What is relatively impressive on the dollar-yen side is the fact that we just refuse to really correct. I think looking at this correction here for the last week or so, where a lot of people thought we're going to be able to break the 1750 and perhaps even go all the way down to 1600 on a corrective basis, has not yet happened. On the other hand, we really haven't broken up to the upside either, with 119 still very much a big resist point. And it does set us up for a pretty interesting tension at this level here. If we do get negative NFPs, I think you may get a much more serious corrective move in a dollar-yen than before, just because the trade is so overbought. There's so much money aligned that way, and 120 is, of course, in everybody's target. But if the data is kind of positive, I think the possibility to run towards 120 is still very much there. So it's really a breakout trade either way. Watching this 119 to the upside, watching the 1750 to the downside, really could determine the continuation move either to 116 or towards the 120 on a dollar-yen. Having said this, though, it's still, I think, relatively impressive the fact that we have not been able to kind of correct any further with just this 117.50 move in dollar-yen for the time being. The pound, on the other hand, has just been a really negative move. Every rally has been a fake out. We've sort of had this big decline on the BOE bearishness, a little bit of a short covering move when the data out of the UK proved not to be as bad as everybody expected. But ultimately, again, now the expectation of the market of moving the BOE rate hikes really get any kind of a dollar strength move this week, that the most vulnerable trade here is going to be this pound trade, especially once the lows here are given. Let me just see what the exact lows are. What is the low here? I think it's the 56.20. So basically, sort of the 56 is breaking, really opens up a tidal wave of a move all the way down to the 55s in a relatively quick fashion. So I think that's actually worth watching here for vulnerability and exploitation as we go forward. Aussie dollar also just got hammered at the end of this week. This flame out over here really, well, this is a flame out just on Thanksgiving, which is kind of interesting. This was a short squeeze on Thanksgiving. But this kind of very, very negative price action, where we're ending on the lows and the best of the highs just kind of flames out, really puts the test of the 85s back in place. So we had this 84.75 essentially as the floor. And I think it's going to be very interesting. To me, the very interesting point here is really not going to be the 84.75s, but really the 84.50s. That's going to be the first level of bargain hunting by the longs. And if that doesn't really hold, if we can't get any kind of support at the 84.50s, then 84, 83 really come into view. That is music to the ears of RVA, but I think could create a very, very negative little feedback loop here for anybody who tries to pick bottoms in the Aussie dollar. So for now, if you kind of betting, it's an interesting asymmetrical risk reward bet basically, because you only have 50 points worth of risk if you think this is the bottom. But I do think if 84.50s goes, it becomes very, very dangerous as you get just a cavalcade of a move to the downside. So Aussie also another one of those highly skewed to the negative side, even though it's grossly oversold, highly skewed to the negative side because it still has a lot of momentum to the downside potential trade. Dollar CAD was kind of interesting today. We had this spike move towards the 1400s. This is the double top test here in November, and then it came back off it on sort of positive and negative data. The CPI was a bit lower, GDP was a little bit better. I still think dollar CAD in many ways is going to benefit from the North American recovery more so than Australia does. And if you're looking for, let me see if I can pull this up. If you're sort of looking for a thematic trade, yes, Aussie CAD is having this short covering rally, but this perhaps may be another interesting trade to the downside, where this former resistance 97.50, this former support becomes resistance, and a short here is a relatively decent asymmetrical short against the potential that the Aussie again begins to decline, and CAD pretty much dies out of this 114. It's not going to go any further. It's definitely getting hit by weaker oil. There's no doubt about it. But so much of the Canadian economy is kind of divorced from oil price at this point that you may have a potential here for further downside move in the Aussie CAD. It's a very slow-moving trade, but it's still an interesting one to take a look at as the week progresses. And then last but not least, the Kiwi. Following its Aussie brother to the downside, but not as much, showing some decent relative strength here. Aussie Kiwi was definitely gotten hurt. We were trading Aussie Kiwi all of last week, and that definitely worked for us to the downside. Again, here, pretty much at the lows. Are we headed back to the 105, 106? Very, very possible if you have further negative moves in the Australian dollar. All of this really just kind of opens up, I think, interesting thematic trades here in terms of Aussie and pound, because we're coming to very, very key support levels that once broken could open up further downside action. And then, of course, last but not least, we have the Swiss National Bank, rather the Switzerland gold referendum, which everybody expects to not pass, which would be positive Euro-Swiss. The key thing that I think is worth watching, though, is if you do get positive data and Euro-Swiss can't rally, that could be a troubling sign. This thing is still not out of the woodwork. Look at the move here. We came to 120.10, and the possibility of us testing at 2000 is still very, very real, given the fact that we're so close in the. I'm just looking here. These. Well, it's actually 2020. This is a little bit of a misleading print here in the interbank market. But still, the Euro-Swiss, we're not out of the woods on the Euro-Swiss story. And if you get sort of positive news Sunday and not a positive reaction in Euro-Swiss, it's a troubling sign. Again, here, this big 120 level could come down with a very, very brutal force if it does come down, and the speculators are able to run that floor. So watching, I think, for next week, the big levels in the pound, the big levels in the Aussie, potentially some turbulence in Euro-Swiss, and overall kind of a clue as to whether this divergence between Europe and U.S. is exacerbating, or it's just sort of in a stationary mode and we're still range trading this 124, 126 level. And last but not least, can we get the 120 run on a positive NFP data? If we do get it at the end of the week, that should be an interesting look. Other than that, those are the major ideas. Next week we come back in full force as far as the event risk goes, so it should be a really interesting week of trade. Wishing you guys the best of luck, the best of trading. This is Boris Schlossberg, over and out.